Professor Baldwin, thank you so much for giving time to CNBC-TV18.
Pleasure to be here.
Starting off first, sir, given the current geopolitical situation, the geopolitical context, what challenges are foreseen, further challenges that can be foreseen after the 1.5 years of continuous disruption, possibly some more expected, and where does India stand in this?
Well, let me focus on the U.S.-China conflict, which has been simmered down a little bit, but is clearly a deep, long-run competition between systems. And I think that poses an opportunity for India, because one of the solutions that many companies all around the world are coming to is China plus one, manufacturing. And India is one of those that could be, and already has, attracted investment to be the China plus one. So that's the geostrategic tension I would like to focus on. I'm not an international relations scholar, so don't really like talking about the Middle East or the Ukraine. Sure. But the economic fallouts of those are very important, but mostly coming through the commodity markets. And I don't see them as fundamentally changing the economic prospects for India. A lot of what India is exporting is services. And one of the interesting things about the geopolitical conflicts, and many of the others, is they influence services far less than goods. So, for instance, you see no sanctions whatsoever by the U.S. against Chinese service exports. And even between Russia and Europe, in the service sector, there's been much less disruption, except for banking and financial sectors like that. So in some sense, the service sector is more immune to these kind of conflicts. And the same thing is true about climate change and many of the other big disruptions coming. Services are somewhat insulated from those. The other thing I would say about Indian industry is a great deal of Indian industry is oriented towards selling to this internal market, which is very large.
Yeah, the domestic consumption is driving the economy completely.
That's right, and so it means it's a somewhat different industrialization market than many other countries, where you can rely on the large, fast-growing internal market as a base for the manufacturing. And as a consequence, a great deal of your base and supply chains are immune from the shocks of the geopolitical turmoil that's going on.
You mentioned about China plus one. Where does India stand in that context? Would you elaborate slightly on that front?
Well, so India, with the China plus one, the idea is that many manufacturing is done only in China now because it's so cheap and so competitive. But there's an idea that to de-risk the investment, you should have something produced in China and something produced elsewhere. But there's no doubt that the investment, foreign direct investment going into China is now actually negative, and people are leaving China in the manufacturing sector. So I don't know exactly where they're going, but it is a trend that is clearly happening. People are worried about the risk of producing in China, or at least exclusively in China.
Our services side has been doing very well. It's a major forex earner for us. So where do you see that for us? I mean, in the sense, how does it really, how does India leverage this basically? And what do you see the road forward?
Sure. So I see service-led development as what's going to happen all over the world. In some sense, India has been the classic model of using an export-led service sector to help to pull up the whole economy and develop the whole economy. And I think that will spread all around the world. One of the interesting things about it is it tends to be quite localized compared to manufacturing, Bangalore being the classic places, but it can spread. But I think that is an opportunity that's going to expand. And one of the things I was talking about this morning is called simultaneous speech translation by AI. And that will mean that people who don't speak English can interact with clients who do speak English. So in some sense, that undermines the advantage of the English-speaking engineers has had. But on the other hand, there's an awful lot of Indians who don't speak English who can provide these services. So it's also expanding the work pool. So I think AI will be enormously helpful in expanding India's exports of services. There's one little thing to say is that AI is in some sense a substitute for some of the service sector jobs. The call centers, for example, are facing very heavy competition from chatbots. And the call centers will never go away because you eventually need a human. You get tired of talking to the machine. But there has been some substitution of artificial intelligence for real humans in the online call center kind of business. And that may spread. But on the other hand, an Indian worker with an extremely good AI may be way more productive and therefore more competitive. We don't quite know, but there's going to be pluses and minuses.
What are the top 3 challenges that India faces in terms of international trade?
In terms of, okay, so the carbon tax is essentially a way of, Europe is putting in a carbon tax, and they want to equalize competition internationally. And that's imposing problems for other countries who don't have the carbon tax. The European idea is that that will then induce other countries to get a carbon tax, in which case you won't pay the carbon border adjustment.
Has it already rolled out?
Sorry?
Has it already rolled out?
No, it's coming out in 2000. This year it'll start, but only for a few carbon-intensive sectors. But it's moving forward.
Okay. So there's a graded plan.
It's a graded plan, exactly.
Yeah.
So the biggest challenge is, I think, climate change for India is an enormous challenge. It's not for tomorrow or the next day, although extreme weather events are really starting to be a problem. But deep down, a lot of India lives in places where it's going to be relatively difficult to live in 20, 30 years if the climate change keeps moving as it is. So I think that's the really first big one. But apart from that, I don't see any really big speed bumps for India. You have a young, fast-growing economy. The governance of the country is well-structured, pro-business. So I don't particularly see any speed bumps for India. I think it's a good place to invest.